Hey guys, it's Sean. I hope you're having an awesome evening or week or whatever. I gotta apologize a little bit. I realized I haven't been particularly uploading the actual podcast I've been recording, so I should probably get on that. But I don't know. I did some changes to book titles recently, so anyway, I've been kind of excited, kind of happy about everything. Um, at least with the publishing side, and there's a lot of courses that are coming out I think you guys are going to love, which I'm really pumped about. But I was joining this challenge. It's pretty popular. It's called Portfolios with a Purpose, and basically you sign up. They do it once a year, and if you basically have the best performing paper portfolio on $1 million portfolio on assets over $1 billion in market cap, I think it's just straight equity. It starts in a couple days. Starts next week. But anyway, you win. You get to donate $500 to your favorite charity. So I thought it was a fun thing, and I'm gonna play around with it, have some fun with it, and make a portfolio of diversified investments. We were the guy was introducing everybody, and they had a meeting to start the competition off. And there was this one guy there, and the dude manages I believe it's an $8 billion fund, if I'm not incorrect. And his words, not mine. He says, we make 5 trades a year with $8 billion. So very long term, very just, equity, trying to find quality companies, fundamental analysis, et cetera, et cetera. Didn't even really like trading. Is like, I am an investor. And by all means, it's cool, awesome. That's great. But then he said something that really, really caught me off guard. And I was in the college sector of the competition, and most of the people there are studying business and want to work in finance. And there was people there talking about, jobs in finance, blah, blah, blah. And this guy says that at the end of the day, this is a learning experience, and we want to know why you made a trade. And in a job interview, we care more about why you made a trade and the reasoning behind it than the performance of your trade. And I was like, what? I was like, wait a minute. What universe do we live in where portfolio performance is not the focus of an investment challenge or of any kind of portfolio construction on the planet? Now, look, I get there are people that are into sustainable investing, or maybe they want to, I know some family offices do, they want to support an industry, or they want to support a charity, or maybe loans in a certain country, or they want to support development of a country, or they want to support some specific thing, or maybe they want, I forget what it's called. It's this acronym, and it's sustainable investing in women, or investing in, I saw one of the people were talking about is investing in African American businesses, and I don't care about any of that stuff. I think it's silly. Social investing, I think, is what it's called. They're socially responsible investing, and by all means, everything, it's cool, right? But at the end of the day, you're here, and everyone at a high level, I guess not everyone at a high level, because like I said, there are big family offices that have really specific charitable goals for their funds. But for the 99% of people that are here in the market for a return, and not to feel good about themselves going to sleep at night, oh, I'm so glad I helped these people doing, for most people, myself included, and if you don't fall into this group, then I mean, okay, man, but you got to be loaded. But for most people, the objective of any market is to make the most money possible. Why else would you be sitting here all day trading? And I just thought it was so ridiculous. And it made me think a lot about so very recently, as I told you guys, I'm returning a lot of capital from the fund to focus on the startup, which I'm very excited about. We've got funding under CreateX, and then we're going in about a week to get funding under the Inventure Prize, which will be cool if it works out. We'll see how it goes. I'm excited. But anyway, because of that, I'm exiting a lot of the sort of longer term crypto holdings that we have in the fund. And if you were here, last year when I talked about last year, I guess about a year and a half ago at this point, but September of, what was it? 2019. I was talking a lot about moving a lot of assets into long gold, and then long crypto, and then short equities, and a couple other specifics. But those were the biggest ones. I did a little bit of stuff in interest rates. And then later on, only because of COVID, was really when we got into the oil trades. And anyway, as you guys know, I started a fund around that and really ramped up the investments you're making. And went really well. We shorted the market late in February and shorted oil in April, very early in April. And anyway, it was great, really phenomenal. I'm extremely happy with it, blah, blah, blah. We're returning capital, so, I'm not trying to raise capital. I don't really care. One thing that we had was a very large amount of crypto holdings. And about, I would say, 1, 2, 3, 4, 5, I'm counting the candles on a chart. I think it was about 2 weeks ago, at least in the short term. And, people could be listening. You might be listening to this in like 2 years and you're like, oh my God, Bitcoin's $1 billion. Like, you're so silly. It's like, yeah, I'm silly, but like, you got to make the best decisions that are in the best interest of everyone here. And at the end of the day, if you can outperform, then like fucking do it, right? So anyway, I did about 6 figures of dispositions in those assets 2 weeks ago. One of them was in Bitcoin, was really the biggest one. That was the biggest holding. It's like 80 to 85 to 90% of the crypto holdings. I'd say 85% of the crypto holdings were in long Bitcoin. I exited right around the 40,000 mark. And with just because it was an extremely, so it didn't start out as an extremely large part of the fund. It was, a normal size position in the fund. But because it increased in value by, a factor of 10 in a couple of months, 4 or 5 or so months, because it increased in value so much, it was a very overweight position in the fund. And so, my investors were really focused on what I was going to do with that position. And I feel so silly. So what happened is I sold it, and then within the next 8 hours, it went from 40 down to I think it was 36.5, 37. I mean, it went down a very, very significant amount, 10, 15%, if my numbers aren't wrong. I can pull up the chart, but the gist of it is, it goes down a ton, massive dump, and then it goes back up for one more day. Yeah, so it went from 40 to 36.7. So 40 by 36.7 is I did the math wrong. I did it backwards. But about 8%, lower than 8% down, and then it goes back up to 4,100, which I do believe we will look back at that, at least in the short term, as a peak. It's at about 29.7 now, under 30 grand. But anyway, it peaks one last day. It goes to 4,100. I knew there was maybe a 50-50 chance it was going to go there again, but for me, the risk reward, and I can talk for hours on what made me take that trade, but the risk reward on holding it, and it just didn't make sense, especially considering how overweight the position was. So anyway, I exited around 40, and for one more day, it's higher than that. It goes to around 41 for, 4, 5, 6 hours until it pulls back, blah, blah, blah. And then obviously it, dumps down. And I would absolutely love to go into more depth on that, but I want to talk a little bit more about the psychology behind it here and how it relates to what that one guy said in the investing introduction for portfolios with a purpose. My investors literally thought I was like a total doofus. They're like, "Oh, why'd you sell?" When it went from 40 down to 37 and then up to 41 again for like a day. But you can't like care about that whatsoever, and you have to be completely okay with the fact that the people, and they're asking me to like justify like, why did you make that disposition? You know, what was the logic behind the trade? And it's like extremely oh my gosh. I really do want to go more into that trade because it was a very, very large trade, and it was a big one. The gist of it was a lot of fundamentals with the media, insofar as it had an incredible amount of time on the news, and everyone on the news was saying buy it. And everyone, like my friends who have no idea how to invest, were like, "Hey, should I buy Bitcoin?" And I learned real quick in 2017 that that's exactly what you need to be selling. But there was also a daily hammer, which was on the next day of the peak, which really should have been my ideal exit, was the daily hammer. But the risk on that was just so high. That is where I entered the short position, though. So I also entered a short position off that daily hammer around 4,100, and that is done. That was on high leverage, so yeah. I didn't execute it perfectly because the high was on a Sunday, and the futures contracts don't start trading till 5 o'clock, but that's another story. And then I a very, very similar trade with Ethereum more recently. But I exited it because they actually made a new high, which is crazy because nothing else did. Ethereum was like the only asset that made a new high. But anyway, back to what this guy said. Like, it doesn't matter what my thought process is behind a trade. I don't have to justify myself to literally anyone. I have executive authority over every position that I take. At least right now. Maybe as we start to grow, I might get stuck in bureaucracy, which I hope never happens. But I know that's how bigger firms like Bridgewater, at least I believe that's how they were. That's what he kind of outlined in principles anyway. But I hope that never happens. So when you have sole discretion, right? You really can't focus so much on justifying positions, especially when a very, very large amount of what you do is oftentimes based on heuristics, and they're just instinctive and they come from experience. And so anyway, I got a bunch of shit for a day. Everyone was like, "I can't believe you sold. I missed out on that extra 5%. And then it lost, I think it was, how much was it in one day? Because the whole market just bombed like immediately afterwards. Yeah. Well, I guess it's worse. Yeah, I don't know. It's about 41 to 35, so. And then it kind of maintained it, kept going down, lost 15%, and now it's, it's at 29, so I don't know, 29 by 40, it's down almost 70, 28.5%, really more like 30%. And of course now everyone's like, "Oh my God, I'm so glad you paid the capital back. I'm so glad you disposed of these assets." And my point is, like, the amount of money that you make, the amount of money I'm going to make on this, amount of money you make, though, it has absolutely fucking shit. Like, it just has nothing to do with how you justify investment or the thought process behind an investment. And at the end of the day, it all comes down to execution. The Art of Execution is a phenomenal trading book that really emphasizes this. It's absolutely incredible, Art of Execution. And I was reminded of that about 75 hours ago. In Ethereum, it was going way up. It was a second M, but I didn't wait for the second half of the M on the second part of the M. And it's kind of hard without a chart, but it was the second part of the M, right? And I was stupid. I was silly. I was also tired. I'm not on polyphasic. And when you're not on polyphasic, it's like, how are you supposed to trade currencies? How are you going to trade currencies if you're not on? Anyway, it's a lot harder to trade when you're not on Uberman because you have to do this thing called sleep, which means you literally miss out on like a third of the trading day, which is a very, very big challenge if all the good trades are at 2 a.m., which is basically how it always is with most of the currencies, and especially with cryptocurrencies. And so anyway, I put in this short position. It was a phenomenal. I mean, it was short at like 13.2, and right now it's at about 1,060. And of course that's on extremely high margin. So the thing runs against me like I don't know what's that as a percent. Let's see, runs against me up to like 14.20. With the entry at 13.20, about $100, about 7.5%, which for what I was trading, that was about 1.5 times the position. I think on the leverage, about 1.5 times the position. It's probably more than that because I exited it because I woke up and I saw it had gone right up against me, so I had to exit it immediately to prevent. It's interesting. Like, I wouldn't have gotten liquidated on it. But there's such a high risk of liquidation that, I don't know, I had to make that snap decision. I chose to exit it, which felt so silly looking back. It was around the 1,400 mark, which was right at the peak. And it was like 14.05, and it peaks at like 14.33. And what I realized is that my instinct, what I thought about the underlying, was 100% correct. I mean, after that happened, that was 2 days ago. And then yesterday, which just closed, it dropped 20% in one day, which is the equivalent of about 10x based on the leverage. It's about 10x. And my position would have been worth, I don't know, $2,000 or so. It wasn't like the end of the world. But what's interesting, and that was on my internal trade, so that was obviously separate from client capital, which I'm fine with, and that's okay. I actually, oh my God, I want to start high leverage funds so much, but I am returning the capital to focus on the startup. But man, when I get back in the game, like once that starts taking off, oh my gosh, it's going to be so much fun. I'm trying to figure out how deep I can go into polyphasic Uberman without like exploding. So that's something I'm working a lot on right now. But anyway, my thought process behind the trade was absolutely 100% correct, and it did exactly what I thought it would do. It went to my exact targets. It's an M setup, so it'll keep on going down to 950. Then it'll gap fill down to 720. Pretty. I mean, it's a great trade. I'd say a 50, 60, 70 Xer if you would have just had the entry I had and then not gotten out of it. But whatever, like it's cool. But my execution was off, right? So like my thought process behind the trade was right, but if you can't execute, guess what? Do you think that your tax return gives a shit about your thought process? Do you think that your shareholder, your annual meeting, like nobody cares? The only thing people care about, the only thing that matters is your tax return. The only thing that's gonna really at the end of the day make a dent in pursuing your goals, pursuing your dreams, getting where you want to be in life is the proper execution of the strategy. And then at the end of the day, it's just a P&L number on a computer screen or on a piece of paper, but usually on a computer screen. And that's the most important thing of any fund, right? It's not about, 3 pages. Really great example, Citron Capital. They have their annual letter that came out for 2020. First sentence of it after, dear investors, and I don't have it in front of me, so please forgive me. I might be off by a little bit. The first sentence of it is, and they run a long short leveraged equity fund, so I think it's like 100 short, 200 long. I could be wrong. I'm not familiar with the fund. I just saw it. But the first line of their return is, this year we had a net return of 220% with max exposure of 14.8%, which is long short. It's an equity thingy. Like, that's all people care about, And then the rest of it's just explaining, like, big things that happen. But nowhere does it say, we thought so-and-so, we thought so-and-so, we thought... It's just actions of what happened and how they executed on what happened. And at the end of the day, there are probably dozens of people. I mean, there's people behind my fund. There's got to be people behind their fund. They do a lot of research. What you get in terms of an end result is just a return number. And that's really all that matters, even though you're not going to see the work behind it. And it's a shame, because you'll spend countless nights, countless hours, countless weeks just researching and learning and trading and practicing. And I mean, for me, it's years and years and years. And for if you stick with it, it's years and years and years and years. And at the end of the day, at the end of, the next year, the only thing you're going to see is a return on a piece of paper. And it's going to say you made this much this year as a percent, as a dollar, as whatever. And that's the only thing that matters. That's the only thing you're going to get taxed on. That's the only thing you can go to the store and buy groceries with. I mean, that's all that matters. But you don't see all the work that goes into it. And that's the one thing that I have found to be extremely humbling. I remember starting out, I would always post like all my trades I was doing on Instagram, or not on Snapchat or whatever. And I'd be like, I bought AMD at 10 and it went to 30, or I bought Bitcoin at 2 and it went to 10. And I don't know. There was so much of it back then. It was a very long time ago. But I do remember that. And then I also remember losing my first $100,000. I remember all the trades that came after that. And then the years of experience after that. What I found is that it's extremely, extremely humbling. And now I basically never post any of that stuff almost like ever. It's like less than 1% of the trades. Like maybe I'll do something on it if it's like crazy. Like US Steel, I had a long shot bet on them that it was incredible. I bought January 15 calls 8 months ago at 23 strike, and they hit 23 on January 12th or something. Like, yeah, like that's something you can post, because it's like fucking crazy. It's really cool. But I'm significantly more humble with the results that I produce and that we have in the fund and all the things that, because you realize so much work goes into it, you realize so much experience goes into it, you realize so much time goes into it, that it really becomes more like almost work than just some fun game. Even though it feels like I love it, like it's great, it's a fun game and all, but it's just different once you get adapted, once you get used to it, once you really start to have it as your whole life. And only once, at least what I think from my experiences and from talking to some fund managers that are kind of more in the billions, but still similar in mindset, is that only once you reach that level of tranquility and indifference, and a lot of that comes down to treating all of your increasing value positions as income and decreasing value positions as expenses, and using those words income and expenses to represent the trades that you make rather than anything else, which we talked about, I think, on the podcast. If not, it's on YouTube. I would look it up. It's just a really phenomenal way to remove emotion from trading. Just use the words income and expenses rather than anything else, because it removes all emotion. It's incredible. It was a total game changer for me. I'm so sorry. I haven't slept in like 40 hours, and so my mind is slipping a little bit. I apologize for anything that slips. That's my fault. I really got to go to sleep. I've been sitting here ripping my hair out on this Ethereum trade. And then I had to go to school. And I was like, man, can I just go to sleep? I passed out after gym for a couple hours. So I apologize. I'm running on like a a box of donuts, which I feel so silly saying, but it's just the truth. Anyway, once you have that tranquility, that difference, and that ability to exit a position at the very height of a market for 6+ figures of realized profit, and just walk away from it unfazed, not like out having to blant it around, float it around everywhere, or whatever the word is for. I'm so sorry, I'm so tired. I think that's really when you get to the point where you can start to have those months where over time you go from making a couple $100,000 a month to a couple million a month to a couple million a week to a couple million a day. And there are traders on this planet that have P&Ls of billions of dollars every single month, and usually it's in funds or in firms or something. And Market Wizards does a really great job. The whole Market Wizards series, they document a lot of these really high level, really good traders, really good investors. You get to the point where you can suddenly make $1 billion in a day making a short on interest rate swaps, which, oh my God, so many of those were great this year. It was incredible. Especially, that's a story for another day. You only really get to that point, though, once you've completely dissociated yourself from the position. And it still oftentimes will feel like you still need to remove emotions, but that's just something that kind of comes over time. Because, think about it, right? If you're out there, celebrating, having a giant party, getting super crazy, super wasted, just, doing tons of crazy, just think of the absolute craziest party you've ever been to, multiply it by 5, just the craziest night of your life. It's, insane. If you're doing that when you make $1 million in a month, say, what are you going to do when you make 15 million in a month? What are you going to do when you make 15 million in a week? What are you going to do when you make a couple $100 million in a month, couple $100 million in a week, $1 billion in a month? You can't physically do significantly much more than that. There's not a physical way to express that any crazier than skydiving without a parachute. There's no real way to do that. And so you have to find ways to route those emotions into other tangential directions, move them away from you, and then be able to process everything mentally in a clear-minded way. And at the end of the day, wrapping back to what we were talking about earlier, that all comes down to results. And it's not justification. It's just results. So please do not fall for this BS of, you can have bad investments, you just need to justify it. If you're learning, yeah, but your goal should always be to have the absolute best performing portfolio that you possibly can, while focusing on the assets that you want to focus on to get the focus that you need to have the best return in that industry. And at the end of the day, it freaking pays off, man. Oh my gosh, does it pay off? I gotta tell you, it feels so great to see these charts going straight down. It's after they've gone straight up, and anyway, so I'll finish earning capital probably next week, and then I'm going to be, I'll do some fun stuff with portfolios with a purpose, and I'm doing some of my own stuff for sure. None of it's really over I don't know how to count. None of it's really over 5 figures, so it's not really that, significant. But really, I'm going to spend a lot more time in the coming months focusing on school. I gotta do well in school. There's the scholarship, and it's a long story. And then really just a startup. I'm really excited to see what happens with Inventure, and then some of the other VC competitions that we're sort of applying into with BlockTrans. I think it's gonna be awesome. I can't wait for summer. I'll be working on growing the team on it, which is just awesome. So unfortunately, alas, you may hear a little bit less of me, which I understand. You're probably already doing a terrible job keeping up with this podcast, which I apologize for, but what are you gonna do? But I just wanted to get you guys a little bit of update on this. Hopefully, everyone here did really well. I'll leave you with this one last thing, and it's a little bit inappropriate, so skip ahead if you don't want to. Let me see. I'm thinking about how to word this without like. How do you word this? So I got this one friend, and she does how do you say, exotic dancing. Perfect. Not like personally, but that's just her career and all. And she's on social media all the time, and sometimes I'll jump on there to ask some questions or talk to some friends or something, and I see it. And this coupled with a ton of advertisements for Coinbase, which is going public, and that's a whole separate thing, but that's also a really good indicator. But anyway, this she basically, it's a little bit more recent, so I guess it was around the bouts of 35 before they dropped to 30 in the past day or 2 days. Because it was in this symmetrical wedge, and then it dropped out of it, whereas Ethereum was more of an M, but that's a different story. Anyway, this chick who has like zero, like investment is like probably like, I don't want to be mean, but very unfamiliar. You know what I mean? Just like that person that's never bought a stock, like ever, etc. I don't want to be too rash, but that's just the kind of the gist of this girl. And she posts up, hey, would you guys, who wants to pay me in Bitcoin, right, for her services? And I'm like, oh my gosh, man. When it comes down to, I don't want to say, but when it comes down to that, when you have someone, doing that, asking for any asset, it could be tulips, it could be, I don't know, what's really high, Neo stock. Watch Neo. But it was with Bitcoin, though. And I was like, that's when man, that, and I didn't have this podcast in 2017 when there was the first, spike to 20 and then very rapid sell-off. But it was the same thing then. Like, I would have my history teacher come up and ask me after class how to invest in Bitcoin. And I'm like, dude, do you even own a stock? He didn't even have, like, the school's investment plan. Oh my God, it's been so long. The 503B. I mean, there was, like, no investment experience whatsoever. He's talking about all his friends trading cryptocurrencies. And it just makes me think about how lucky we are to be growing up in an incredible bull market. I hand on my heart, thought that the bull market was going to end after I published my book in 2019. I looked back at it now and I realized I published it on March 19th, which I thought was... Sorry, I published it on January 28th, but I published the Kindle version on March 19th. Excuse me. And I remember looking at it thinking how funny it was. It was the same dates as the bottom almost on March 18th last year. and it was just anyway. That was after everything peaked, and that was after the fact. But I just got a good laugh out of that, and used it as a way to really tell that the masses, what everyone says to do is usually wrong. When I was selling, they were, I remember Pomp was on CNBC telling everyone why to buy Bitcoin. And it was like on every single headline on CNBC for 3 or 4 straight days. And if you guys remember that story with the trombone and NVIDIA stock, it just came down to, well, at least some of the fundamentals came down to just, taking what everyone was saying to do and doing the exact opposite. Even my investors told me to do the opposite. And I could have executed it 2 or 3% better if I had been a little bit more risk averse with the technicals and waited for the hammer candle on the daily. But like I said, it was overweight. So when it's overweight, risking 2%, risking versus a 5% downside. When that 5% is a very, very large percent of the portfolio, it's not like a 20% position at that point, or even a 10% position at that point. It was significantly larger than that. You just start to get to points where you have to exit it. And that's what happened with Ethereum. Is the trade I had here, the account only had like $800 in it, and I was down, or maybe it was 700, and I think it was 800. I don't remember. I can check. Let's see. 647, 8. It's about 860, I think. Anyway, I lost like 200, 300, $200, $250. And when it's such a big size of the account, such a big chunk of the account, you have to make decisions that maybe you would normally make if it was a smaller or an unleveraged position or a smaller percent of your portfolio, because it's just bigger and it's treated differently, and you have to treat different size positions differently. And I feel like a total doofus because I think I was supposed to finish this podcast like 20 minutes ago, and I'm probably going to pass out here, but I just wanted to get this off my chest, and I also wanted a reason to finally close down these charts on crypto. And this is my excuse for finally walking away from this trade after everything that's been happening in the past couple of weeks. I'm short Disney, but by the time you hear this, it's not really going to matter, is it? They're going to gap fill on an H&S. It'll be great. But anyway, guys, I hope you have an awesome, awesome, awesome time. Go out there, apply it, absolutely crush it, and watch YouTube, because I got a ton of new courses coming out through got a lot of them getting rendered, actually, like today. So I'm excited about those. I literally recorded them like last year in February. So my content turnaround time is still abhorrent. But until it starts to really take off, I've got limited stuff to allocate to it, and it doesn't really make a difference to me. So it's all for you guys. So yeah, that's that. Thank you guys so much. Have an amazing time, and freaking go out there, apply it, absolutely crush it. Thanks, guys. See ya.